Hello everybody and welcome to the midweek market update from Smack the Markets for the 5th of February. Now, more recently, the coronavirus has had much more impact on market sentiment, more so than probably most economic news announcements. Just today, we've had another piece of news that's hit the markets. It's a bit unreported, unsubstantiated news at the moment, but there's rumors that a effective drug treatment has been discovered from a team in China. Now, that's just created quite a bit of volatility in the markets, particularly around the sort of risk sentiment coming back on. So let's take a look at a few markets here that we discussed on Monday in Monday's newsletter, and some of the markets here that we're looking at going into the second half of the week. So if we could take a look at the Dow here first of all, and take a look at the Dow future on the 4-hour time frame. On Monday, the market was sitting right in between these two decision point areas here, and we were looking at either the market sort of breaking either side of these decision points. Now, we discussed the strength of these on Monday. We can clearly see what's happened. The markets had a very good run over the past sort of few days, and we've seen a lot of bullish activity coming back in and risk on coming back into the markets. This morning here, we've just seen a very big strong move on the back of this coronavirus sort of news that's just sort of come out. So going into this afternoon, when the cash market opens, the market's kind of setting up nicely, breaking into this new trading window up here at 29.20. So we can see that the market's just run to that decision point at the moment, and it's sitting right there at the moment. So we may well get some sort of retracement. If we do, a retracement back into the 28,870 area, again would be sort of quite nice, looking for new long positions on this market. Our sort of sentiment on these US equity markets is to the long side, and the Dow and the S&Ps are certainly sort of playing catch up to the NASDAQ at the moment, which has just this week broken out to again all-time highs again. Now, if we come and take a look at the some of the markets again we discussed on Monday, US dollar against the Singapore dollar. This was one of our favorite plays here for a dollar strength opportunities. We can see that what we were looking for on Monday was retracements back into the moving averages here on these mid time frames. That actually occurred last night. We got some very small candles in here back into the moving average zone, which we look for, and you can see the strength here of the dollar sort of playing out against the Singapore last night. So this market's now, if you took this, you're sitting on multiple targets here of reward. It's we're not looking at continued upside at this point here. It's a bit too sort of stretched, so we'd be looking at sort of booking profits here and waiting for the markets to pull back, and then looking for some new entry points from that point onwards. Now, one of the other markets we discussed was Kiwi CAD. Now, what we were looking for here, if we take a look at this on the daily chart, we're looking for weakness again, a break through this lower level on the market around that sort of 85.50. Now, the market didn't achieve that on the lower time frames. This was a consolidation, and we were looking for that to get broken and a continued weakness. That didn't happen. We've had a bounce back here, back into the level here on the daily time frame where the market's found previous support. Now that's quite a nice area there for new short opportunities if the market does break through this lower level again, because it just in the context of the trend here. Now at the moment this morning, the coronavirus news has given the Kiwi a little bit of a boost here, and it's sort of showing a bit of strength. However, it's still looking rather weak, and again, if the market sort of breaks through this sort of level, we'll certainly be looking at new opportunities to be positioning up here, which is probably a bit more of a tighter point within the context of the trend, and our targeting area first point will be down towards that 85 sort of 50 area. Now, looking at new opportunities going into the second half of the week, I think Swiss yen is one market that's looking sort of quite interesting. This one was another one that we've been looking at in the trading room early week. Again, we've been looking particularly at this 112.705 or 112.705 level. That corresponds with the high of the this first bullish candle here on the weekly chart, and we're looking for long opportunities on the break of that level. And you can see that the market yesterday broke that level and filled the next trading window, which was up to that 113. We're getting a bit of retracement now after that move, so possibly back into 112.705. There's key support there. Could be some nice areas to look for longs, but we're certainly looking at continued strength in this market sort of going forward. And there's plenty of room above that 113 level here to the long side. So there's a few markets there that we're keeping a close eye on in the trading room going into the second half of the week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.